Welcome back everyone. This is a brief update of the gold market. Gold prices stabilized higher in the previous sessions, boosted by various happenings around the globe. In our view, this is a very interesting period for the precious metal, as despite some positive financial releases from the US and China, it maintains its position higher, sending the message that possible economic or geopolitical risks persist and may intensify within the financial markets. This report aims to provide a brief understanding of the main drivers of gold's price and attempt to recognize some possible opportunities that traders could be able to capitalize upon. Some analysts believe the trade deal has not matched the expected positive influence on world trade as per the understanding of the Phase 1 deal. Even if the two sides are seemingly getting along with each other, doubts remain on what the US may have in mind for the future. For example, Washington's relentless move to put Chinese tech giant Huawei Technologies on a trade blacklist due to the national security concerns is still in place. Also, in the first days of January 2020, just after a couple of weeks of signing the Phase 1 deal, reports had surfaced that the US was taking action to reduce and restrict artificial intelligence exports to China. These reports implied that the AI products could be used for military and surveillance purposes by the Chinese, and so the US could be in a more diplomatic way trying to avoid giving the technology to the mainland. In general, we continue to see the US being very cautious with its moves regarding China, and this could be implying the two sides do not trust each other, at least not as much as we thought after the Phase 1 deal had been signed. On a separate note, sources from the Middle East indicated that during the previous weekend, a missile attack took place on a government military camp in central Yemen, which killed over 100 people. The Yemen war has been going on for years now, and the involvement of the terrorist crew, which are said to be Iran-aligned Houthis, is adding more to the fire after what happened in the past weeks in Iran and Iraq. The idea that things are getting worse in the Middle East was intensified further, as in the previous day some rockets were launched allegedly from within Iraq towards the US embassy in Baghdad. The happening confirms that the situation could be in for continuous unexpected events to take place and could possibly be the reason behind gold stabilization at higher levels. Neither the US nor Iran have shown intentions to collide face to face, and so we believe unexpected matters could take place rather than the two sides confronting directly each other. These events could increase in numbers and continue to influence gold's prices in the short term due to the fact that the US does not seem willing to back off and let the situation rest. Quite the opposite. The US looks determined to take control of the situation, which ignites the fight in the Iranians even more. Again, this has been and will continue to be a strong driver for gold's price, and traders could be looking at the matter as an indicator for future direction. In addition, we keep an objective mind on the specific subject, as we believe that many scenarios are possible, both bad and good. As a conclusion, many reports today place a lot of emphasis on the mysterious respiratory disease in China, which has already killed 6 people and has entered a new phase with the illness spreading from person to person, according to Bloomberg. It has not affected gold's price for the time being, yet Chinese stock markets have traded lower on the news, and in case the situation worsens, gold traders may be willing to take action accordingly. Moving on to the technical analysis, and this is gold's 4-hour chart. In the latest 4-hour sessions, gold has tested our R1156570 resistance line, but was not able to clearly break above it, which implies some traders may find the level as too high for the moment, or they would like to see more of the fundamentals prior to engaging with it again. However, if the precious metal surpasses our R1, then the next possible stop could be the R2 1580 and 50. Level last seen on the 8th of January 2020. The next stop even higher could be the R3 1593, also seen on the 8th of January 2020. At the moment, gold is currently trading above but not far from our S1 1552 support line, which was tested many times in the previous week. In any case, the next possible stop lower could be the S2 1539.60 level that was last tested on the 14th of January. Please note, gold has not traded below S2 1539.60 since the 3rd of January, and so a move lower could be an indication that the current fundamental drivers of gold are not in place or circumstances have changed. The level below our S2 could be the S3, 1528.80 level. The RSI indicator, below our chart, is currently running between the 70 and 30 levels, indicating some ambiguity is present. We hope that you may have found something useful in our report that you can incorporate in your trading. From all of us here at IronFX, best wishes for solid trading.